Welcome back to Edutainment concept. I hope everyone is cool after the weekend. Still, it's weekend actually. If you can hear me, don't forget to let me know. Here is the risk disclaimer. So, whatever I'm going to do here, it's my analysis. I will be responsible for my trade only, not your trade. Okay. So, if you are trading your real money, then it will be your responsibility and you will take your own risk. I'm not gonna be responsible for your win or for your loss. Don't forget to let me know if you can hear me or not. Hey AFX, how are you, brother? Ryan, good evening, brother. Sound is clear. Thank you, AFX. Thanks for clearing that. Yeah, so today is Sunday. I will go slowly. Okay, I will go slowly. I will talk something else, and in the meantime, I will talk about the price action. It's gonna take little longer today's session. Before starting my stream, as I can see little more, I mean less people, like I mean just ten people. So I would love to wait 5 minutes more to let others join, if anyone is interested to join actually. So I will just spend more time, little more time. Okay, I'm sorry for that, but yeah, I hope you will understand. Okay, so I have just tweeted that if you can refer to your friend my channel, or in any other way, I don't know how to do it, I'll be really grateful to you. But you will do that only if you think whatever I'm doing here it's helpful for you. Then you will do that. Otherwise, don't refer my channel to anyone. I don't want to make harm to people. Okay. So yeah, if there is any way, please just refer my channel, because YouTube is not doing a friendly behavior with me. It's not boosting my channel. I don't know why, but yeah, it's not doing. Maybe I'm not providing something good. That's why I don't know. The impression is really so too low. But I need more people. Hey Anatoly, how are you, brother? Good afternoon, Martin. Welcome, brother. Nice to meet you today. Thank you, Anatoly. So you just joined 2 days, maybe, right, Anatoly? As I told, I'm gonna quit this YouTube. Okay, very soon. I'm gonna quit YouTubing very soon. Okay, trust me. I don't lie. I don't like to lie. So yeah, today or tomorrow I'm gonna quit the streaming. I'm gonna quit to uploading the video to active in Twitter. I'll be disappear from every space. Before disappearing, I really love to see that as much as people I can give my thinking, as much as people I can uh, send my understanding. Okay, that's my target. So if you do that favor to me, I'll be really so grateful. Okay, don't be so selfish. Don't be that. If you know anyone who is trading ICT concept only, not retail trader, because they don't understand what is ICT, so yeah, please refer my channel. Okay, I'll be really grateful to you. Or if you know any other way, like sharing the link any place, something like that, I have no idea, but if you have any idea about that, help me that, brother. I'll be really grateful to you. Hey George. Hey brother, I'm fine, Robin. How are you, brother? PDS, good morning, traders. Trades. Okay. Good afternoon. It's actually the evening in Bangladesh. So yeah. Hey Sebastian, how are you, brother? I can see still 17 people. I would love to wait more 2 to 3 minutes. Okay. So at 9:05, I will start to discuss the price action. I mean this week analysis, and so just 3 more minutes I will wait. I'm sorry, but yeah, I'll just wait 3 more minutes. Okay. Psychology, trading psychology. All of you know how to trade. Trust me, all of you know how to trade. Hey Mikti, good afternoon, brother. It's evening over here, so good evening. Every single of you know how to trade. The reason you are not profitable is you don't know how to use the weapon. Okay, RK16, one of my brother, he's with me for long now. He's a soldier. So I have tweeted in my last tweet. He gave me a reply, and I really love his reply. He told that we know what is this, but we have to know how to use this. And he gave an example of the weapon. That means I have the weapon, but I don't know how to use the weapon. That is the most important part. How to use that weapon. Because if you don't know how to use that weapon, it can kill yourself. Okay. So yeah, I agree with him. Most of you know how to trade. Every single of you know. I believe that you know how to trade, but you don't know exactly how to use your concept. I'm here to explaining that things. Okay. The way I explained in my last stream yesterday and Friday. Both of these streams are gem. Trust me, man. I did that stream. That's why I'm telling you no, not that. But these two stream I explained how to how to use this concept. And if you don't follow them, you will never be consistent profitable trader. No one can be profitable trader at their beginning if they don't follow some rules. Later, when you will understand how to use this concept, or you will understand the price action, you will have more experience, then you will have no restriction, no rules, nothing. You can trade the way you want. You will be able to do that. But at your beginning, when you are struggling to be profitable, you have to follow some rules. You have to skip some setup. You have to let go some setup. Okay? That's all you have to do. And yeah, please, this is this is must follow. Okay, this must follow type rules. Okay, there's now about 30 people. I guess I can start the the analysis for today again. Everything I'm doing here, this is my thinking only, my expectation only. I'm not telling you that it's going to happen. Do your own analysis by yourself. Okay? And again, please don't forget to refer my channel. If you want, you can you please do it if you think I'm helpful then. Okay. This is dollar index. This is the last week of March weekly chart. Okay. So yeah, over here, what do you see? This is the weekly fair value gap. Market came to this inversion fair value gap over here, and then it. I'm sorry, I just can't actually start it. Before starting this, I need to come here to this area. Romy, my sister, you asked me the question, and I told you that I will explain the order block first before starting my stream. So when I saw your uh, comment, I remembered that you asked me how to know. Sometimes I mark the lowest down close candle, sometimes I mark the consecutive candles. When I mark the consecutive candles and when I mark the lowest down close candle, you asked me that question and you told me that I should go with my experience. So I am here to explaining my experience. Here, this is the fair value gap which has traded over here. Okay, so this is my fair value gap. I'm not just going everything else. I'm just gonna explain when you should look for the highest close highest candle, and when you will look for the lowest candle, when you will look for consecutive order block, when you will look for just the lowest down close candle. It will depend of the bull candle close. For example, this is my order block. I'm thinking this is my order block, so I'm gonna mark the high of that candle. Okay, that is the high of that candle. Now I will look for the candle close. Until a candle close above that high, it's not valid as a order block. It's not valid. So you can see this is that candle which has closed above that candle. So now it is valid as a order block. But at the same time, I will see the close of that candle. Where did it close? Did it close just above that candle, or it has closed above the consecutive order block level? Okay. So here, this is the down close candle, most obvious order block, and this is the consecutive order block. When I have seen this candle has closed above that consecutive order block, I'm gonna mark this high as my order block. I'm going to believe that market is actually going to trade that order block. this is that order block which is going to stop the price and send it back toward the liquidity. Okay, so this is how I determine when I should look for the down close candle. Is this candle coming at least until here, or it can reverse from consecutive order block level? That means either from here or from there. Both of this level is my order block. I will define depending on that candle close. So if I saw that this candle closed above that high, this candle it closed above that high, then it would be my order block. I wouldn't give a shit to that two candle. If I saw that this candle closed actually above this candle, let me show you, above this candle, okay, but it failed to close above that high, above this high. That means this candle it has closed above this high, above this high, but failed to close above that high, then I would say this two candle will be my consecutive order block. I though it's the consecutive order block, but I would love to see market will reach at least until that high, then it will reverse. That would be my expectation. Now, can it come lower again? Obviously, it can come, but that is the high probability that market is not coming until that last candle as a order block. Okay. So I hope you got the point. If you still confused, ask me, then I will explain it later at the end of this streaming. I'm sorry, I forgot that to explain that one. Now here is dollar index, and you can see this is the inversion fair value gap. This is the last fair value gap. Price came here to that inversion fair value gap. It went higher. Okay, where did it reach? To that fair value gap one more time. What is that fair value gap? Weekly bearish fair value gap. So what is my expectation right now? See this high, I don't want to see it will go through that high. I'm talking about this high. I don't want to see that. I don't want to see that market will go to that high. I would love to see market will reverse again, and it will go at least to that fair value gap, then finally it will go lower somewhere. Okay, so my next week's expectation is market will fall again. If it failed to fall, instead of that it go above that high from the daily chart, I will start to think no, market is not falling, actually it's going higher. So something like this. This week market is started, it came here from the daily chart, it go above that high. At the same time it has made some kind of fair value gap here, then I will start to think market will make, I mean, two fair value gap. This is the last fair value gap, maybe there will be another fair value gap. Every single time price will come here, I will start to think market will go higher. If it go through this, come here to that fair value gap, I will start to think market is coming higher again. But if market fail to go above that high, respect this fair value gap from weekly chart, I am still bearish for dollar index. I'm thinking that market is falling, actually not going higher. In this type of situation, I will go with this week. So I'm gonna mark the 50% of that week. This is the 50% of that week. I'm gonna mark that as a consequent encroachment. Why this week is important? I'm starting my analysis from the very beginning, so you should not have any kind of confusion. Okay, how I actually do that? You should not have any confusion. See this consequent encroachment of that week. If it would love to go little higher, it can reach until that week. It should not go through that week from daily chart, not from weekly chart. I'm talking about weekly chart, but I'm just thinking about daily candle. So from daily candle, I would love to see market can reach until that consequent encroachment, even if it wants to go higher. After reaching over there, body has to close at the level of consequent encroachment or below the consequent encroachment. Then it will fall. It will fall. That's my expectation. If I see market go above that high, body closed above that high, I'm bullish then. Until then, I'm bearish. I'm thinking market is coming to that fair value gap again. It is coming here. That's my expectation for now from weekly chart. It doesn't need to come here directly by this week. I just need a run toward that liquidity. I mean, sorry, that fair value gap. At the same time, I have this low and that low. they are relatively equal lows. Okay, so yeah, this low and that low, they are relatively equal lows. That is my sell side liquidity. You can say, why this low, brother? This is just a candle low, not even a swing low, nothing. Then why you are marking that low? The reason I'm marking this one is I'm trading through 1 minute chart. Okay, I'm not trading in daily chart, I'm not trading in hourly chart, I am trading in 1 minute chart. If you go to your 1 minute chart, I guess if I come in 15-minute chart, I will get a swing low over there. Let me check actually. Yeah, there it is. You see, this is a swing low. In 15-minute chart, it's actually a swing low over here. This swing low and this swing low, they are now relatively equal lows. So from weekly chart, every candle's low is a swing low from your lower time frame. Every candle's low is the swing low from your lower time frame. What is your lower time frame? 15-minute chart. Every candle's low. If you just go to your 15-minute chart, you will get at least a swing low around that low. This is my sell side liquidity, that is my target, and I'm thinking that market is going toward that sell side liquidity. It's my expectation. If market would love to go little higher, no problem, it can go until that consequent crossment. Don't forget about this weekly fair value gap. It can reach until the high of that weekly fair value gap one more time. Body has to close at the level of consequent crossment or below the consequent crossment from daily chart. Okay, sorry, either from daily chart, that's the best case scenario, but it can happen through your 1 hour chart as well. But the perfect scenario is daily chart. This is all from weekly chart. So I'm coming here in daily chart now. Now in daily chart, you can see market came lower. This is that order block. I'm gonna remove this sell side liquidity from my chart over here. Okay, I just remove it from my chart. So price came here. Where did it reach? To the low of that daily fair value gap. This is the daily fair value gap. Now I don't have the weekly fair value gap in my chart. If you want to keep them on your chart, no problem. You can keep them. But for me to make it more clear, I just went to this daily fair value gap. I have this daily fair value gap. So price came here. It went lower. This is the order block which has hold the price, send it back. You can see there is a volume imbalance and it perfectly respects that volume imbalance, but I don't give the priority to that volume imbalance. The reason is I sit told the volume imbalance is the lowest PDRA in comparing with other PDRA in his concept. So from there I actually give low priority to the volume balance, but still I kept them on my chart. But I was seeing this order block as to, I mean, how can I explain? This actually came to this order block, then it went higher. Where did it came? Daily fair value gap low. Okay, this is the daily fair value gap. It came until that low. Now from the daily chart, it can go little higher until that consequent encroachment of the weekly week. Why that week is important? Why this week is important? Because this is the most obvious week which has cleared all of these highs. This high, this high, this high, this swing high, all of this relatively equal highs, all of this buy side liquidity has been cleared by that swing high, and this swing high has traded that fair value gap. That is why this swing high is really so important. The 50% of that swing high is called the 50% of the fair value gap, last fair value gap. So the way I use the last fair value gap, the 50% of the week is also the same way I'm gonna use. Okay, so that's for your more confirmation, and this is not only applicable for weekly chart, it is also applicable for any other time frame, hourly chart, daily chart, any other time frame. It is applicable. The way I explain the week, you will go for that. Like this week, is this the same week? Like over here when market is falling, am I going to mark the 50% of that week? No, I'm not doing that, because this low though clean some high, so I mean, sorry, swing low, but it didn't trade fair value gap perfectly. It didn't trade that, but brother, it has traded the inversion fair value gap. I don't care. I need kind of this type of fair value gap. So this is how I actually mark the week. Which week is gonna be important for me, and when I find out that this week is going to be important for me, I'm going to mark the 50% if I'm bearish. If I'm bearish, then I'm gonna mark the 50%. If I'm bullish, for example, I'm bullish, then I will expect, I will expect, sometimes you see that I mark a swing high or obvious high, and I told that I want to see a body close above that high. I want to see a body close above that high. Try to mix this concept with that situation. Why I always look for that? I want to see a body close above that high, because if a body can close above that high, that means market has shifted already. It's the confirmation, because this swing high is kind of the, sorry, this week is actually the last parabolic gap which has been broken. That means there is nothing which can stop the price to go higher. This is how I use the same concept in different direction. When I'm bearish, I'm gonna mark the consequent encroachment. When I'm bullish, I don't give the priority to that consequent encroachment. I just mark the high, and I am waiting to close a body above that high. So this is the way I use the consequent encroachment of that. Okay, so this is for your understanding. Okay, clear, sir. Thank you, Romy. Hello, bro. I'm here. Hey, Peter. You missed, man. You missed the important session. Please don't forget to watch, re-watch, or recap last 2 days streaming, man. This is extremely important. I refer you. Okay, Peter. I mean, if there is anyone else I don't know, then maybe I wouldn't. I would just skip that. But as you were with me for long, so Peter, please don't skip that two live streaming. Please watch them. Okay. I was seeing same relatively equal lows. Okay, then we have the same type of thinking, brother. Get freedom. Recap of the MSS has 2 minute 2 before reverse price action. What did you say? Recap of the MSS has to minute 2 before reverse price action. I didn't understand your question, Peter. Sida Pro, good day, people. Good day, Sida Pro. How are you, brother? Robin. So here, right now, from the daily chart, what do I see? I'm seeing this low and that low. See these two lows over here. This low and that low. They're relatively equal lows. But at the same time, this is the weekly fair value gap. So I didn't mark it differently as my sell side liquidity. But I can see this low and that low. They are relatively equal lows from daily chart. So I have this sell side liquidity. If you remember, I have some swing relatively equal lows around that area from weekly chart. I have this relatively equal lows from daily chart, and it will keep going on. Okay, so yeah, I'm still thinking market is going to fall. All of this higher run is actually liquidity taken. What type of liquidity it has taken? See this high and that high, these two high are relatively equal high. Market has taken those relatively equal highs. Where did it go? It just tapped the daily fair value gap maybe, or it missed it. Okay, it missed it for little, but yeah, it can reach until that low of the daily fair value gap, or if it is overzealous, it can reach until that consequent encroachment. Then it should fall. That's my expectation. It should fall. Then where toward what it should go? That sells a liquidity from daily chart. At least this low and that low, they're relatively equal low, so they should go toward that liquidity at least. Okay. Sorry, need to MSS and trade the third. Uh, that's just a concept. I will clear that. Okay, Peter, I will make it more clear. I just give you the introduction over there, but yeah, but slowly but definitely I will explain that more. So since you didn't do my JB analysis yesterday because you were so too tired, can you please do natural gas for me today when you finish? Okay, I will go with natural gas then. Okay, just natural gas, nothing else. I miss Nasdaq more than my girlfriend. If your girlfriend listen that, she'll be angry. Okay, she'll broke up with you. I'm a broken heart. I know how hard it is. So don't get hurt by this type of comment. Remove it, brother. Okay, I will watch the videos. Okay, no problem, Peter. So yeah, right now I'm thinking market is going to fall, but it seems like market is extremely bullish. Still, I'm seeing this as a liquidity taken. Market is actually taking the liquidity. When I'm gonna change my bias, if I see a body close above that high, see this high. If I see a body close above that high from daily chart, then I will start to think, okay, market has reversed already. It's going to break that daily fair value gap, and finally it is going toward that buy side liquidity, and it's going to take that buy side liquidity today. Okay, so yeah, that's my expectation so far from here. Okay, from the daily chart kind of situation, I'm bearish. That's my expectation, but I will change my direction if I see a body close above that high from daily chart. Above that high, then I will try to look for buy. Until then, I will only look for sell. I'm not interested to take buy. Now let's go to hourly chart. So this is the hourly chart, and I'm gonna remove the red line from here. You can see market went higher. Remove this one as well. Market went here, take that buy side liquidity. See this high, that high, they are relatively equal highs. When price came here, it has made that relatively equal highs more stronger. So I have this strongest liquidity here. Market has taken that liquidity. Why did it tap? To that hourly fair value gap. See this candle high, that candle low. I'm gonna mark them over here. Here. So this is the hourly fair value gap, and you can see market actually trade that hourly fair value gap. Body is closed inside that hourly fair value gap. Right now price is over here. So if this hourly fair value gap can hold the price, send it back, nothing is wrong. If market is over jealous, then it can reach until that consequent encroachment. From hourly chart, it can go little higher toward that small fair value gap over here. See this small fair value gap from hourly chart. I'm gonna mark two line over there. So this is one line and this is another line. Okay, so market can go little above of that consequent encroachment from weekly chart, and it can reach until that hourly fair value gap. But from daily chart, the candle's body has to close at the level of that consequent encroachment from weekly chart or below that consequent encroachment from weekly chart. That's my expectation so far. Now I want to see lower run. Market should fall. Where should it go? Toward this sell side liquidity. Where is your sell side liquidity? This low and that low from hourly chart now. Okay, now I'm in hourly chart. Just this low and that low. What do you think? What is this? This low and that low. What is this? Relatively equal lows. Can I go with this low? Obviously you can go. Can I go with this low? Obviously you can go with this low, because all of these are at the same level. So if this is the extreme sell side liquidity level, market should go toward that sell side liquidity. At the same time, you remember we had the liquidity below here, below this low from weekly chart. We have a liquidity around this line from the daily chart. Now from hourly chart, I have this liquidity from hourly chart. If you go to 15-minute chart, maybe you will find out more liquidity above that hourly chart. But I don't want to go over there. All I am expecting is market is going to fall. If market go above that line, which I have marked as a buy side liquidity from daily chart, and if it is able to close above that, then I will change my direction and I will start to think, no, market is not going to fall. Actually it's going to go toward that buy side liquidity from weekly chart. It is going toward that. That's my expectation from dollar index. Is it clear to all of you guys? I'm done with the dollar index explanation. It's very small, but yeah, I'm done with dollar index, because here we just need a direction, nothing else, not precision, nothing at all we need just a direction, where market is going, which way it is going. Is it going toward the sell side liquidity or it is going toward the buy side liquidity? Oh, I forgot about the daily chart. Here this low and that low from daily chart. Okay, I forgot to show you that this was the most obvious liquidity. So this is my overall target. Until it's not taken, I'm bearish. But if market is able to go above that high and close above that high, then I will start to think, no, market is actually going toward that buy side liquidity instead of the sell side liquidity over here. Okay, so I'm done with dollar index. Let me know if any of you have any kind of confusion about the dollar index. And again guys, this is just my expectation. I'm not gonna tell you that it's going to happen, and don't frame your trade depending on my analysis. You have to do your own analysis and then you can match it with me. If it matches with me, then we both are thinking the same way. If it doesn't match, don't change your analysis. Be strict with your analysis. And then later, if you find out that you were wrong, then you will have a chance to compare. Where did you wrong? What was wrong when you did your analysis? Okay, so this is really so important. I hope that you will understand the importance of that. Okay, okay, I will watch the videos. Oh, thank you, Peter. Sir, what is your age? Can you guess it? Vagani, Jack Vagani. Can you guess, brother? Robin Hood. I also want natural gas analysis. I will go for that natural gas as I promised to Guru that I will do that. So yeah, I will do that today. Okay, it's gonna be money. I mean, the Nasdaq is going to be finished very soon. It will take maybe maximum 15 more minutes. So after 15 minutes, I'm done with my analysis with Nasdaq. Okay, Robin Hood. That's the medal for whom? Is that medal for whom? And there is the Twitter link on my comment box. If any of you are interested to follow me through my Twitter, please, uh, you can click to that link. Trust me, it's not a spam or kind of thing. It's just my Twitter link. Okay, I just use stream elements to post that link to the comment box. X explanation was clear, Titu. Thank you, AFX. So I will move it. Okay, Nair, yes, okay, it's clear. Thank you, Romy Singh. Sir, if we have constant encroachment at weekly, then can we candle closing condition at daily basis? Absolutely that. I love to see depending on the daily chart, but if you would love to go your 4 hour chart, because weekly daily 4 hours, yeah, 4 hour, if you go to your 4 hour chart, you will get a better perception. But I love to see that from daily chart, because if you want to wait for the weekly chart, then you will have no chance to trade that week, because that's a weekly candle. It will close, I mean, it will close after 1 week. So you have to go your lower time frame to find out that you are right or you are wrong. You will have to find out that from your lower time frame. That's why I love the daily chart. But if you want to go to your 4 hour chart or 1 hour, 1 hour is not actually good, but 4 hour chart, it's also applicable, because you have to go one time frame lower. Like, this consequent encroachment is from weekly chart, so below the weekly chart is daily chart, below the daily chart is 4 hour chart. So weekly consequent encroachment will be determined by 4 hour chart. Daily levels will be determined by hourly chart. Hourly levels will be determined by 5 minute chart. 15 minute uh, levels will be determined by 1 minute chart. Okay, so something like that. Okay. Jack Vagani, 25 to 30. I'm 32, brother, but you are very close. I'm 32. Kitan Patel, 27. I'm 32, brother. I'm 32. He's sweet 32, lol. Yes, I'm 32, brother. Hey, sis, what are you doing here? Nagis Akhtar, yeah, she's my sister, new bride. Please pray, I mean, keep her in your prayer, guys. Fazlul COVID, clear. Thank you, brother. DXY seasonality is up until April 1st or 2nd week. Okay, I told you just how I am going to determine if it can close above that high. I'm bullish. So I will just wait maybe one day, just one day. I mean, the Monday or Tuesday. I will explain that when I will be in Nasdaq. It will be more clear. In dollar index, I just need a direction. That's all. Just need a direction. So I don't spend more time over here to dollar index. From here, I try to find out where it can go. What is the most obvious level? I just go for that. That's all, brother. This medal is for you because your direction is very accurate. Okay, Robin. Robi Singh. Okay, no problem. Lol, I'm two. Kitan, so you are two. You are 32 too. Okay, we are at the same age. God bless you, Nagis. Yeah, Romy. Uh, Nagis. Leah. Romy, she's my sister actually. She prayed for you. So yeah, if you are still here. Okay, so I'm done with the dollar index. Let's go to most important chart. Here you go, the weekly chart for Nasdaq. Now, as one of my brother told, please brother, start your analysis with a clean chart, very clean chart. See over here. Why there is okay? So yeah. Now there is no drawing. Can you see? There is no drawing. I have two indicator. One is here, the mini S&P chart. So this is a indicator actually, and I have another indicator over here. It's empty. Though I'm not using it because I'm really so confused about the Josu, so I'm not gonna use it not anymore. I'm gonna remove it. So right now I have just one indicator, and that is just mini S&P chart below here. I have only this. Okay, this is a very clean chart. The way you see the chart, this is the same way I'm watching the chart, and I'm now going with this clean chart, and I will show you how I mark my levels from a clean chart. First I will go to monthly chart. You don't need to go over there, but I will go over here because market is at the all-time high. I need some kind of level here to predict that market can reach until that level, then it can reverse. Okay, so I'm gonna predict the all-time high now. Again, I didn't learn this thing from ICT. As ICT told, when your market is at the all-time high, you have to keep taking buy until it proves you wrong. But still I am trying to guess some level where market can reach. So this is the monthly chart. High, low, higher high. This is the retracement level. So I'm going to go to the low and to the high. The lowest body close candle, the highest body close candle. I'm gonna use the oh, just a second. So monthly chart. I'm going to use this standard deviation as my direction. Okay, I would love to mark some level as I don't have any price action over here. So I need a level where I can expect when market will be there, then it can reverse. Until then, it will keep going higher. For me, I love the minus 1.5 standard deviation. I have seen that lot of time. Price reverse from that minus 1.5 standard deviation. Okay, so I'm gonna mark that minus 1.5 standard deviation at my buy as my buy side liquidity. Above this 1.5 standard deviation, there is another level minus 2 standard deviation. Very weak in my opinion, very weak. Still I'm gonna mark that one. This is minus 2 standard deviation, and finally minus 2 point standard deviation. That means if market is able to close above that minus 1.5 standard deviation from monthly chart, if it can close above that line minus 1.5 standard deviation, then I will expect market will reach at least minus 2.5 standard deviation, though I don't want to see that. Okay, for your kind information, I don't want to see that market will come that far, but still I'm gonna keep it on my chart. That is that three level: minus 1.5 standard deviation, minus 2 standard deviation, minus 2.5 standard deviation. Right now I'm thinking that market will reach at least minus 1.5 standard deviation before reversing. I would love to see that. So I just got my first level to my chart. This is the first level to my chart which I have just marked. Do you ever sleep, bro? I sleep when I sleep. Now I am in weekly chart. From weekly chart, what do you see? Market went lower. It has traded that parallel gap. See this parallel gap? It has traded that parallel gap. Then market tried one more time. Tap to this weekly parallel gap one more time. Here, I'm gonna mark it actually. So here, this is that weekly parallel gap. Here. So yeah, price came here to that weekly parallel gap, went higher. Come back again. What did it tap? Weekly parallel gap. Went higher again. Went lower. Trade that order block. I'm gonna mark the order block actually. Lowest body close candle. This is the order block opening. and I'm going to mark the 50% of that order block. So here is the 50% of that order block. I'm gonna mark that MTH. So here, this is that MTH. So market has traded that order block. Body should not close below that mean threshold. Now you can say, brother, but it has closed below that mean threshold. So what do you say? The very next candle closed above the mean threshold. So I will see this as a fake breakout. Still, this order block is valid. This order block is still valid. Okay. So it has traded that travel gap. Lowest body close candle is my order block. Price trade that order block level. It reached until that mean threshold, went higher. What did it do? It has taken that high, right? Now I'm going to remove these levels because I don't need them to my chart. I want to make it more clear. It has taken that high. What is it called? I need your answer, brother. You are with me for so long. What is it called? This high and that high. What is it called? I need your answer. You have to tell me the exact word I use for this. Exact word. What do I call this thing? Please, please, hurry, 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 man, hurry. No, no, it's not relatively equal highs. Robinhood, it's not right. Why minus 1.5 standard deviation is buy side liquidity? The minus 1.5 standard deviation is kind of very strong level. Ryan, it's shallow run, obviously shallow run, but I actually give them a name. There's three types of liquidity. So I give a name. I want that word, specifically that word. No, it's not relatively equal highs or equal high. Nothing like that. I want that specific word, man. What is it called? Yeah, it's shallow run. I know, but when I see the shallow run, I give a name. I showed you three liquidity, three types of liquidity. Okay, what is it called? Shallow run, equal high run, shallow run, shallow run, shallow drama, shallow, all-time high liquidity, obvious. Thank you, AFX. Thank you, man. Thank you. I just get the answer from AFX. Thank you, brother, for that word. This is called obviously, yeah, Ketan Patel. Absolutely, brother. This is called obvious liquidity. Okay, yes, Sebastian. This is obvious liquidity. The shallow run is called the obvious liquidity. I don't know what is going to happen, but I know market is going to take that obvious liquidity. 99.99% of the time, market take the obvious liquidity. 99.99% of the time, market takes the obvious liquidity. The shallow run is called the obvious liquidity. So this is my obvious liquidity. Here is my minus 1.5 standard deviation. Why it is important? Because in my experience, obvious drama. Absolutely, Peter Henry. That's called obvious drama, brother. Obvious drama. Yeah, absolutely, brother. So in my experience or in my observation, I saw minus 1.5 standard deviation react most of the time. Most of the time I get the reaction from minus 1.5 standard deviation. That's why I marked that as a buy side liquidity, and when I saw market close above minus 1 standard deviation, I'm expecting market will reach at least until that minus 1.5 standard deviation. So yeah, before that minus 1.5 standard deviation, I have this obvious liquidity. This is called obvious liquidity, and I'm believing that market is going to take that on. Now remember, in dollar index I told that I want to see market will go lower. In dollar index I want to say market will go lower. From that, if it wants to go higher, it can reach until that consequent encroachment, then it is going to fall. If market is going to fall, this guy should go above and it should clear that obvious liquidity. Dollar index is actually falling, this guy is actually going higher to take that on. Then dollar index maybe wants to go higher, then this guy will start to fall then, something like this. This is my expectation. Now, if dollar index fail to do that, what is that mean? That means there is there can be a buy run for Nasdaq. There can be a buy run, but that will be high resistance liquidity run. That means market will go and clear that one, but it will go very strong way. I mean, sorry, very slow way, something like this, with a very struggle. It will do struggle to clear that thing. But if dollar fall, it will just go like this way. Boom. Low resistance liquidity run, high resistance liquidity run, or the sloppy run, or the seek and destroy mode. So this is that thing. Don't think dollar is actually falling, so it has to go up. No, dollar index is just a barometer for Nasdaq or future market. That means if dollar index is going higher, this guy can go higher as well. It's not like pair or forex. If you want to use the forex, then comparing with forex, dollar index is going higher, forex has to fall. If forex is also going higher, you will never find a setup. That will be very high resistance liquidity run, and it's nearly impossible to trade if you are trading forex. But here the Nasdaq market or the future market, both of them can go the same direction. Sometimes it's high resistance liquidity run, sometimes it's low resistance liquidity run, but they can go at the same way. It can go at the same way. Okay, I hope it's clear to all of you guys. So from here, I just got the buy side liquidity here. Do you see anything over here lower from the weekly chart? Do you see anything lower? Why market should go lower? What is the reason to go lower? I can see food over here. I came here, I first took that food, this low and that low. See this low? They are relatively equal lows. I have taken that food here. After taking that food, I ran away from that area, and I took that high and leave some food. Take some food there, leave more food over there. Whatever food I got here, I leave them here. So it is now the highest food is over there. Food means liquidity. What should I do? I should go lower again, leave them like that way, or I should take that food first before falling. It's your job to find that out. What should market do? What do you think over here? Just looking at this price action, very small price action from weekly chart. What should market do? Should it go above and take that buy side liquidity, or it should fall again? Where market is very near to that obvious food. It's your job to find out. But yeah, I am bullish. Now here is daily chart. Now here is the part of narrative: accumulation, manipulation, distribution, continuation of the distribution, reversal. This is the part of what to say, I mean, narrative. This is the day of Monday. That means in Monday I will expect some kind of accumulation things. Okay, this type of things. Then in Tuesday, market will take the Monday low. At least it will clear the most obvious low in Tuesday. Then maybe it will go little higher. Then there is the part of Wednesday. Wednesday will go little lower, boom. Thursday it will go little lower, boom. Friday reverse, and it will close over there somewhere. I am expecting market is going toward that buy side liquidity. That's my weekly analysis telling me. How can I know that my bias is strong? I will depend on Tuesday. Is Tuesday is a manipulation day? Is it taking the low of Monday, or it is actually going higher? If I see in Tuesday market actually went higher, cleared the buy side liquidity from Monday, but it failed to go lower manipulation, then I will start to think maybe I'm wrong. Maybe I'm going to get the opposite run. In Wednesday, I'm going to get lower expansion. Thursday, continuation of the expansion. Friday, it is coming inside that range and is going to close over there. Something like that. So Tuesday is going to define am I right or am I right? Okay. Accumulation day, that means the Monday, I don't need the narrative. because I know it's gonna be sloppy, it's gonna be choppy. Now here is the part, you should go somewhere else. Where should you go? How to use? Okay, this is empty chart and I am showing you everything one after another. I don't know who else do that. Here is the part to go calendar. I am going step by step. This is the part where you will go to your calendar. Now let's see from calendar. All I care about medium impact news, high impact news. In Monday, we can see medium impact news around 10 a.m. So in Monday, actually there actually we used to not see any kind of yeah, Martin C, I missed your comment. Yeah, it's called the obvious liquidity, brother. You just clear my confusion. I thought DXY is inversely connected with NQ like forex pair. No, it's not. Take buy side first. Absolutely, Winston. That's my expectation, brother. In Monday, actually there most of the time you will see no news, but we have a news in Monday. We can have little volatility in Monday. We can have that. I'm really curious, if we get that volatility, we'll be able to trade in Monday. Most of the time Monday we are not able to trade because of the sloppy price action. Even if you take an entry, your target should be maximum 10 handle to 12 handle or 15 handle, where we used to take near about 25 to 40 handle. But if you try to trade in Monday, you have to put your target profit within 10 to 15 handle, okay, in Monday. As I can see a news around 10, so I will see if we can have any kind of volatility around that area. Okay? This is my first expectation. Then in Tuesday, we have the medium impact news at 8:30. We have a medium impact news 9. We have a high impact news at 10. What type of news do I have? Is there any high impact news like CPI, then FOMC, then Fed Chair Powell, or what else do we I have? PPI, PMI, like non-farm payroll. Do I have anything like that? No, I don't have. So I will expect some kind of volatility and I will try to catch that on. What is the rules for you? If you ever see a news in front of you, don't jump into the market. Wait to news published first. After publishing the news, the best is to wait 15 minutes. But if you get any opportunity to take the entry after the news published, go for that. At least wait 1 minute to 2 minutes. So we have a red impact news around 10 a.m. So you are going to what to say? I mean, you are going to trade that 10 a.m. news. So you will wait at least 10:01 or 10:02 until 1 or 2 minutes. You won't push your button. After that, you will try to catch that volatility. Nothing is wrong with that. So now we have Tuesday, some kind of news. If we have a news in Tuesday, so what is my expectation? I'm expecting price will be here. It will make some kind of relatively equal lows in through the Monday. In Tuesday, by using the news, market will fall and it will clear that relatively equal lows or obvious sell side liquidity. It will trade that our daily fair value gap. Maybe it will go until that constant encroachment. Anything, okay? It will do that. Then Wednesday, what do we have? We have 6 p.m. Actually, in the day we don't have any news. In Wednesday we don't have any news. So Wednesday, basically, we find the expansion without any news. I believe that we will still get the expansion or little volatility, even we don't have any news. Still, we are going to see some kind of volatility. Maybe it won't be huge, but yeah, still we will get some volatility. Then in Thursday we have unemployment claims at 8:30. I believe that huge volatility will be there. 9:45 Chicago PMI volatility 10, home sell, huge volatility. So in Thursday actually, we are going to get the volatility which is going to take that buy side liquidity. This buy side liquidity is going to be taken in Thursday. That's my expectation. Then Friday we have Fed Chair Powell speak. I hate him, but I believe that in Friday it will be very choppy and it will stay inside the weekly range. Or if we get little volatility, maybe, sorry, I mean not here actually, If we get little volatility, maybe it will go above the Thursday high, then it will come back again into the weekly range. So this is the part where you are going to use your narrative and you are going to use the news volatility. Without volatility, we are unable to trade. If there is no volatility, we are unable to trade. But that doesn't mean you are going to catch the news. Never try that. Never try to catch the news. Wait until news published, then try to catch the news. Okay. Now, here is another part. In Monday, maybe this is the low. Okay, Monday low. Then there will be some kind of sloppiness, something like this. This is how Monday finished. Okay. Now Tuesday, you are thinking that manipulation. This is the Monday low. You are thinking market is going below that Monday low. No, sometimes, sometimes it doesn't need to do that. It can easily clear that relatively equal lows, and maybe there is a 15-minute fair value gap. It will tap that fair value gap in Tuesday. Okay, then it will go higher. That means it doesn't need to clean the Monday low. This is the place where I'm not agree with you guys who actually look for the previous day low as a liquidity, previous day high as a liquidity. That is the place I am not agree with you, because this is not obvious liquidity, but this relatively lows equal lows is the obvious liquidity. Market has to take the liquidity. Where markets see the liquidity, market see this relatively equal lows as a liquidity. It doesn't see previous day low as a liquidity. It actually see this, and if it finds a fair value gap over there, it can just tap over there and it can go higher. Simply it can do that. How do you trade? I explained that yesterday with my 3 hours long stream. Watch them. I went to Monday and Tuesday only. Just go over there and trust me, it's must watch type stream. Watch them. How to frame the trade. Okay. How to read. Actually, how to take the entry. So I explained that over there. And also the video I have uploaded today. Uh, Today at 8 a.m. New York local time. Watch that video. That's the last week Friday. Though it's a hindsight price action, but you know that I don't use the hindsight. Okay. But so still I did it in live, then I made the video. So don't get confused that this guy actually explaining the price after seeing that. Don't think like that way. So I just uploaded that video. So if you are interested, you just watch that video. I hope that it will clear a lot of your confusion. So this is my thinking from next week. From next week, I'm bullish toward that buy side liquidity, but I want to see market will work with this fair value gap first. See, this is the daily fair value gap. So market is going to work with that fair value gap first, then it will go toward that buy side liquidity. That is my expectation. If I'm extremely wrong, I will try to come every day and I will go with every day. Okay, this is just a weekly analysis. Just a weekly analysis. I will keep this in my mind, and this is how I start my week every single week. Now I'm coming in 1 hour chart over here. This is 1 hour chart. Okay, and let me make it bigger a little bit. And this calendar I don't know. I didn't need. Okay, I don't need it. This calendar. I have already explained how to use that news. So over here, this is the hourly chart. So from hourly chart, what do you see? What do you have? So for now, forget about this buy side liquidity. Just forget about that. This buy side liquidity is not in your chart. This is from daily chart. Okay, so I'm gonna remove it from my chart. Now from hourly chart, what do you see? You see market came here. Where did it came? Is it a random level? This fair value gap. This is a very random level. Why, brother? Why this is a random level? Because when market went higher, this is the last fair value gap. This is the first fair value gap. First fair value gap and the entry fair value gap. Where price came to that fair value gap. Is this a important fair value gap? No. This is just a random fair value gap. Market can reverse from there. It should not reverse from there. This is depending on hourly chart. Okay, it should not reverse from there. It gave me kind of reaction. I'm happy to get that reaction. I'm really happy to get that reaction, but it should not reverse from there. It should reverse either from this fair value gap or from that fair value gap, because these two fair value gap is the fair value gap. This is not fair value gap. This is called, what is this called? This is called that. Here, this one is called just this, just a gap. It doesn't have a value. It doesn't have a value, not even fair, not even unfair. It doesn't have a value. What is this called? Let me change the color. Guys, today's market is closed, so I'm going to little deeper. Okay, I'm sorry if I make it more longer. I'm extremely sorry, but just stay the guys who are really interested to learn. Otherwise, you can leave. Okay, what is this called? This is called value gap. That means this gap has value. This gap has some value. This is an apple which is not good. Okay, I mean, this is a, this is just think, this is an apple which is not good. That means maybe it's rotten. Do you know, I mean, what is that word actually? Is there anyone from Bangladesh or from India? जो एप्पल होता है ना, वो जो खाने के लायक नहीं होता है, वो जो लाइक वेस्ट हो जाता है ना, उसको क्या कहता है इंग्लिश में? कोई भी फ्रॉम इंडिया और बांग्लादेश से, rotten, I guess that word. That means that apple we can't eat because it's already, I mean, what to say? Ah, man, whatever. This is an apple which we can't eat. Okay, this is that apple. Here is an apple which we can eat, but very sour. Okay, not sweet. And here, yeah, rotten. Okay, so this is that apple which is rotten. We can't eat it. But this is not rotten. This apple is not rotten, but we can eat it very sour. Okay, very sour, not sweet. This is the apple which is called, this is an apple which is called the sweet apple. Okay, so this apple, now you are going to the shop to buy an apple. You saw and wrote an apple. Are you going to buy it by your money? I don't think so. Then you find out that this is an apple which is not rotten, though it's sour, still you can eat it, and it is like you can buy this with a small money. Maybe sometimes you are going to buy that. You are going to buy that. This apple, it is really have a very nice value, but this apple is the most sweetest apple. You have the ability to buy this apple. Which one you are going to buy? I would love to buy this one. So I'm gonna use this gap for later because this is the most important gap for me, which has value. That value is not simple value, it has a fair value. This gap has value, but it's not fair because it's sour. It's not fair. Here, this rotten apple or rotten gap has no value. It's just useless. I am not going to use that on that useless apple. I'm gonna throw that. I'm gonna throw that from my shop. Okay, I'm just going to do that. Premium or discount? No, premium and discount. I don't believe in that, brother. I mean, I think you are new, brother. Hello, Mahlaba. I am late. How are you? I'm fine, brother. I'm fine. How are you, brother? What's the reason though? Three gaps. Three gaps. इसलिए नहीं, no, not three gaps, is not like that. I have more gaps over here. See this gap, here is another gap over here. This is called first parallel gap. It has a value, huge value. You have no idea how can you use that parallel gap. I mean, how beautifully you can use that parallel gap. But in between this gap has no value. I just want to say this gap is not a gap which I am going to use. This is called last fair value gap. This is called entry FVG. This fair value gap is going to call entry fair value gap, but this gap I'm going to remove it from my chart. I don't need that gap. Then brother, why market reverse from there? Why market reverse from there? I will explain that when I'll be in 15-minute chart. Why 15-minute chart? Just go to my Twitter and watch the pin post. You will understand. I saw market came here, it went higher. Where did it go? Just where did it go? Exactly where did it go? Okay, it went a random level. I know, I know, I know. It went in a random level. But brother, there is also a entry fair value gap. I know there is entry fair value gap. I'm gonna mark that as well. Here is your entry fair value gap. There is your last fair value gap. Very random level. First price came here. That entry fair value gap. It went lower. Then it's broken. When it's broken, what I told you, remove that from your chart. Keep that last fair value gap. So this last fair value gap is going to hold the price, send it back until that entry fair value gap. Where market reverse from a random area, I don't want to see that. So I want to see market will go at least to that entry fair value gap, but if it is over jealous, then it's going to that last fair value gap, this last fair value gap. I'm just reading the story. Okay, now think I'm wrong. Brother, you are wrong. Market is not going lower, and I have seen that market is going higher. How can I define my bias then? You will wait. From where? Not from here, not from here. Okay, you have to start from your 15-minute chart. But from hourly chart, what I can see overall I can see I have this buy side liquidity, this high and that high. This is relatively equal highs. I have this clean buy side liquidity. But brother, there is the level from daily fair value gap, I mean sorry, daily chart as well. I don't need that. From hourly chart, I can easily see this is relatively equal highs. That is my buy side liquidity. Below this buy side liquidity, this is the last fair value gap. Price tap over there, it's going lower. I would love to see it will go lower. Now, you told that market is going higher, then why should it go lower? I told you the accumulation phase, remember? This type of accumulation. So Monday, I will expect this thing. Then in Tuesday, see this low and that low. They are relatively equal lows. Market is going to take that relatively equal lows, tap to that entry fair value gap, or if it is overzealous, it will go to that last fair value gap. Then it will go higher, something like this. Then in Wednesday, market will go little lower. Maybe it will trade any kind of fair value gap over there. Then it will go higher. Thursday, it will go little lower, make some liquidity maybe, take lower, boom. Friday, it will come back again into the range. This is the way market works. Your weekly bias is telling you that market is going higher. That doesn't mean boom. No man, that doesn't mean that. Okay. So yeah, try to now, Mustafa. I will tell. Okay, brother. When the time will come, I will tell everything. Don't need to ask me. I will tell you, brother. Right now, it's not important. I'm not telling. I thought that I should go for that, but the last fair value gap, entry fair value gap is still not clear to all of you guys. Still, you are confused about reaction and the reversal. You need to finish this first. When you will be absolutely, you will be the master of that thing. I will go with that first fair value gap. This is most complicated thing. Trust me, man. This is the most complicated thing. You will have no idea how to use this one and how complicated this one to mark. Trust me, man. Whatever. So that is my expectation. Okay, remember the line I marked. This is how I am expecting market will work next week. This is how I outline that. If I see market is working like that way, I'm very confident about my direction. If I don't see that, and if I see actually market went higher, make relatively equal highs, then it has taken in Tuesday, it has taken that relatively equal highs, then it went lower. Maybe we will play this game in another way. I will explain that when I'll be here and market will, it will just print the price into the chart. But first, you have to have an idea from the weekly analysis how it is going to work. So this story you are going to predict before even reading the story. You have 5 days left. 1, 2, 3, 4, 5. You have these 5 days in front of you. and all you are going to do in your weekend is you are going to predict the price, how it is going to react. Until now, there is any confusion, guys? I know I talked too much, but is there any confusion until now? Because the next step, that means the 15 minute, is gonna be more critical, because I am going in a deep dive, as our 16 told us that please bro go in deep. So I'm going in deep today. I'm not just telling you the small thing. Until now, is there any question? Is there anywhere you are confused? If you have any confusion, let me know that. This is how you have to read the price. You will mark the buy sell liquidity, you will mark the sell sell liquidity, you are done. No man, if it was that much easy, everyone would be the profitable trader, because marking the relatively equal highs, relatively equal lows is too easy, man. It's too easy to mark them. Anyone can mark them. See, these lows, they are relatively equal lows. You can mark them as your sell sell liquidity. You can mark them as your sell buy sell liquidity. Now you are expecting market is going higher. In Monday, you are waiting for buy, but you are seeing market is falling. In Tuesday, you are waiting for buy, you saw market is falling. Then you started to think, oh, okay, so maybe my bias is wrong. Market is actually going lower toward that sell liquidity. So you will start to keep sell, and suddenly you will see market is going higher. What the? Seriously? Why market is going higher? When I was thinking market is going higher, now it is going lower. Then in Tuesday, sorry, when market is going lower and you started to take sell, suddenly you will see market start to go higher. What the man? This whole concept doesn't work. Until now, I was looking for buy, but market went lower. Now I am looking for sell, market is going higher. Okay, maybe my bias is right. Absolutely, this is going to take that buy side liquidity. So this is Wednesday. Let's take buy. But suddenly you saw market is falling. Why market is falling? It should go higher. Okay, so I'm wrong over there. Actually, market is falling. Then you started to take sell. You saw market came here. Okay, is very near to that buy side liquidity. I have no chance to take buy, I mean sorry, to trade today. So wait for tomorrow and we will take buy again. So you will start to take buy, market start to fall. Then when you take sell, market went higher, stopped you out. What is that day? Disaster. Because you don't have, today is Sunday and market is closed, so as much as I want I can talk. So I will keep talking. I will show you the things you are facing right now. If you anybody argue with me that you don't feel like that way, I'm not agree with you, because I felt like that way. I did my weekly analysis. Everyone is telling you how where market is going, but how it is going, nobody is going to tell you. That is the most important part. How market is coming here? Is it coming here straightly? No, they will say it will tap some fair value gap, then it will go here, something like that. No, it's not that much easy, man. You have to go with every single day. In Monday, you have to understand that market will make some kind of sell side liquidity. Any kind of sell side liquidity, market will make that. If your bias is bullish, if you are thinking market is going higher, then in Tuesday, if it make the relatively equal lows, in Tuesday it will take that relatively equal lows. If market failed to make relatively equal lows in Monday, instead of that it went lower than the Friday low and tapped any kind of some kind of fair value gap or something, anti fair value gap or obvious level in Monday, okay, without making the liquidity. If it cleared the Friday low or most obvious sell side liquidity, you are thinking market will go higher, and market has taken the liquidity from Monday, then it started to consolidate. What should you think in Tuesday? It's going lower that Monday low again? No. Maybe it will take little sell side liquidity, very little sell side liquidity, but it will tap to the most obvious 15-minute fair value gap. Then it will go higher. In Tuesday, it has done the manipulation over there. Then it went there. Okay. Wednesday, you have to think market will go below first. Why? Every single day has the PO3. This is the weekly PO3, but every single day is also have the PO3. So in Tuesday, first it will go lower, then it will go higher. What can it do here? If there is no sell side liquidity, what it can do? It can make some kind of relatively equal highs. Then it can take that sell side liquidity. After that, it can go higher. That's the Wednesday. But you are going to get the expansion. Every single time market is going lower, You will see liquidity taken. After taking the liquidity, boom. Again market went lower, taken the liquidity, boom. This is how Wednesday works. Always, brother, 99% of the time. 99% of the time. Don't believe you. We don't believe you. Okay. We don't believe you, okay? Where is Wednesday? I'm not sure. It's already over the Tuesday, Wednesday. Okay. Here, this is the Wednesday, okay? Market went lower, went higher, went lower. Why it came lower? To take that liquidity. Tap to that fair value gap. Boom. Did it went higher? Obviously. Then it went lower. Sometimes something here. It came here. It give you the run. Went lower, give you the run. But it shows, I mean, it seems like it's falling. Yeah, it was falling. I don't know what was the bias over there. If the bias was bearish, then maybe it fall. If the bias was bullish, but it was. But every single time, it will take the liquidity, it will give you the run. It will take some kind of liquidity, it will give you the run. Now, for example, it went lower, it went higher. Now you are looking for buy. Still you are looking for buy, but market is falling. Market is falling. You are not getting any buy setup. What did I say? You are just going to miss that whole run. If you are looking for buy, you are going to miss that whole run. Every single time market is falling, you should look for that buy. Now come here to Thursday. Market went lower. First it went lower, boom. Every single time market went little lower, boom. Now what time is it? 2. Market went little lower, it went lower again, boom. Went higher. Did it went higher like that way? Obviously. Okay, brother, that's just a random week. We don't believe you. Show us another week. Let's go in Wednesday. Where is Wednesday? Uh, 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 uh. Wednesday. Is that Wednesday? I guess, yeah, Wednesday. So this is Wednesday. Market went higher, boom. Went higher, boom. Went higher, boom. Went higher, boom. Now, what time is it? Went higher, boom. Did you get the boom until here 3:15.5? Then market started to consolidate or something like that. Did you see this? Little went higher, boom. Went higher, boom. Went higher, boom. Boom, boom, something like that. Now let's go to Thursday. Here is your Thursday, right? uh Thursday, yeah, here. Market went higher, boom. Went higher, boom. Went higher, boom. Again it went so high, boom. Went so high, boom. High, boom. Did you get it? This is how Wednesday and Thursday work. No man, it went higher, it went so low. Now it is in discount. Let's take buy. Don't do that. Wednesday doesn't work like that way. Thursday doesn't work like that way. Every single time, market will take some buy if your bias is bullish. When market is going higher, you will see that as a liquidity taken run. After taking the liquidity, boom, it is going higher, brother. Every single time you will look for lower market structure shift. Boom, went higher. Are you afraid? Oh man, why it is going higher? Take the liquidity, simple thing, man. Boom. I don't know, man. Trust me, this is the way you have to play this game. Why I'm giving you all for free? Because I'm gonna quit this trading. You will never see me here again. When I'm done, you will never see me there. You don't trust me. When I started this streaming and I told that I'm gonna give you everything, a lot of people commented that no, man, we don't believe you. Everyone talk like that way. They are going to give you everything. Did I give you something which nobody give you? Did I, until now, did I give you anything that nobody gave you ever? The precision, how to read the price action every single day, how to do that. So what I'm telling you, it's gonna be true. Okay. So very soon you are going to miss me. Trust me, man. Okay. So this is the part. I'm going to remove this line from my chart. This hourly fair value gap from my chart. This last fair value gap from my chart. Now I am in 15-minute chart. Where I am. I am in 15-minute chart. From 15-minute chart, what do you see? First job is mark the buy side liquidity and the sell side liquidity. So this high and that high, they are relatively equal highs from 15-minute chart. Anybody has any confusion? No. I don't think so you have any confusion. Is that clean buy side liquidity? Obviously, man, this is very clean buy side liquidity. Okay, do you have any sell side liquidity? Let's see. This low and that low, they are relatively equal lows. Is still, this is also relatively equal lows, right? All of this, I mean, yeah, you can mark this as your sell side liquidity, but as I see, this low is all very near to that low, so I'm gonna mark that on. Is there anything wrong? No, there is nothing wrong. Now I have this sell side liquidity, I have this buy side liquidity. What is your direction? What should you look for? Buy side liquidity. This week you are thinking market is going to take that buy side liquidity. Okay, I agree with you. So what should market do? But the market should tap to this last fair value gap, then it should go higher, because we are in 15-minute chart. Market is what it is going to do. Sorry, see this fair value gap from 15-minute chart. You told that 15-minute last fair value gap, it's going to hold the price. So what market is going to do? It's coming here, then boom, done. Done. Let's go. Close the chart. We are done. Really? This much easy? I don't think so. I don't think so. Where price came? What do you see this swing high? Where did it came? To that fair value gap. So I'm gonna mark that fair value gap. This is the fair value gap. Okay. Below this buy side liquidity, let's look for another fair value gap here. Do you see any other fair value gap except this one? I don't see. If I force the market, then I can have a fair value gap around that area, very small. But if I just minimize my chart like this, sorry, not like this, here and this, can you determine there is a fair value gap? Is it really easy to see? So I actually avoid this type of fair value gap. I avoid them, and I don't care this type of fair value gap. I actually love to mark this type of obvious fair value gap. It doesn't need to be that much big, but not this hard to see. I don't need them. So I saw market came here, now it is falling. But why price retraced from there? This is random level. Let's see. This is the last fair value gap. This fair value gap and this fair value gap are the same thing. This is both same thing. Where price came? Last fair value gap. Where price came? Last fair value gap. What is this? Just a consolidation. You have this consolidation area. Now you are thinking market is coming here. This is the part you will start to think about the retail trader and about the market maker. For example, you are the market maker. ICT give you the example. If you have watched the ICT 222 mentorship, then you heard that ICT told, if you are the market maker, what did you do over there? Okay. Now this is the place where it knocked in my mind. What should I do? Then I tried something. It never works. Slowly, I keep asking, I keep pushing myself. What should market maker thought in that type of situation? What he was thinking? Now I'm gonna show you some question. You will look for them. You will add them on your thinking, and you will find out, is it relatable or not. Okay. Forget about this fair value gap. Forget about this fair value gap. Just remember this sell side liquidity, this buy side liquidity. Just forget about this and this. Forget about them. Forget about this fair value gap here. Okay. What do you have? You have double top. You have triple bottom. This is just a zone. Okay, not level. This is just a zone. This is a zone. So you have triple bottom. You have double top. You are thinking. You are the market maker. You are thinking you will go over there. You will stop out them. These sellers, whoever sold there, you want to stop them out. If you want them stop out, want to go over there, you are going to start a new week. Your pocket is empty. You want to earn some money first. How do you do that? If you want to get the huge money, how do you do that? Whoever takes sell over there, whoever takes sell over there, they're profitable, right? Where did they put their stop loss? When market went lower, where did they put a stop loss? Above that swing high. See this swing high? Let me mark it. Here, this swing high. When market came lower, make a swing high, went lower again. All of their stop loss is over here now. I went higher, stopped them out. Whoever took sell over there, they're stopped out. Still, there is little smaller amount of people. They are very conservative. They didn't trail their stop loss, so their stop loss is over there still. So there is still some people who are in profit. Most of the 80% of the people are stopped out over here. Already they are stopped out. When they are stopped out, here or some people they took buy. They didn't stop out yet. Okay, so majority of the people are buyers here because they saw market is going higher. If market can go below that low, if market can go below that low, whoever got stopped out took their sell there and got stopped out there, they are start to think support is broken, let's take sell, it's gonna be working as a resistance. Here we are stopped out before, we should not miss that run. Where it is going? Below that support level. See this support level, it's coming to that support level. Our target is this support level, maybe somewhere here. This is our target. Whoever took their sell there, they got stopped out here. Why they got stopped out? Have you ever trade like the retail trader? Have you ever been the retail trader? I was a retail trader. I saw this top double top, I took my sell over there. If I were in that trade, I would trail my stop loss above that high. When market broke very strong way over there, I would put my stop loss over there. Why? It has broken. Now market is going higher, 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 higher. I got stopped out. What what I have missed? I was thinking market is coming to that level, but I got stopped out here. So what I'm going to do? I'm gonna take sell again? No, I'm not going to do that. I'm waiting. If market can break that low one more time, then this support level, this is just a zone. Okay, don't think this is a level. So this is a zone. This is just a sorry. Now you are the market maker. You have to think that you are the market maker. So this is a zone. If market can break that support zone, I'm gonna use that as my resistance again. So whatever I missed here, I got stopped out. I don't care. I'm gonna catch that move. I will take that sell over there. Now at the same time, if market can go lower, whoever took their buy, whoever was thinking that, whoever missed their buy to that area. Remember this area? This is a very strong support zone. Whoever has taken their buy here, market went to the all-time high. Then it went little lower. It came here. This is the first time when market gives the impulsiveness again above that swing high. Whoever got take their entry over there and they put their stop loss after seeing this run here, they got stopped out here. They're going to take their buy again over there. They took their buy seeing over there. This is the perfect zone to take their buy, or they are still waiting to take the buy. When market will come back again at that area, they are going to take the buy because they are thinking market is keep going higher. This is the all-time high. Market is going to keep going higher. If market can go over there, lot of people will push their button. When price will be here, 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 they are going to push their button. Market will tap over there. It will go little higher again. Whoever didn't believe that market is going higher again, they will start to push their button over there. They are going to chase their price around that area. So I just finished the sellers. Now I am talking about the buyers. Just remember, when market will break this zone, these sellers will be in the market again. Now I'm talking about the buyers here, the buyers here who got stopped out here. Some of them took their buy there because this is relatively equal lows from 15 minute chart. Relatively equal lows, very strong support zone. market went higher, break that swing high. What does it mean? That means this strong zone is actually holding the price. Market is going above that sub resistance zone at least, then it is going to the moon. Lot of people didn't get confident market is going higher or not. Some of them will take entry over there, some of them will still they don't push their button. Market will go little higher, they will start to chase the price. Okay, these sellers they are thinking that okay, I'm very happy I got stopped out over here, I'm very happy, okay, I'm good. Then market will go lower, it will come here. What does it mean? Whoever to buy here, every single buyers are now stopped out. Is there any buyers now in the market? Whoever took their buy there, they have already moved their stop loss. Every single person has moved their stop loss in 15-minute basis, not in daily basis, not in hourly basis, just 15-minute basis. Whoever took their buy there, they got stopped out here. There is no buyer left in this market now. All the buyers turns into the sellers. All the sellers who got stopped out here, they will also turn into the sellers, because this strong support zone has broken. Now market is going to use that as a resistance and it is going lower. Every single person is going to sell from there. What market will do? If you are the market maker, what did you do? Did you let all of the profit you have earned from all of this price action, did you let them be profitable by sending price over here? I wouldn't do that. What I did do, if I were the market maker, I was the market maker, what I have done, I would put the market little lower, okay, then I would let it go little higher. I would do that one more time, boom, I would do that. This is the retail things you have to understand, or you have to read the retail mind here. If you are the market maker, what did you do? You did that because if you can make this thing, that means the retail trader, whoever are the buyers, there is no buyers left in the market. When market went higher, sorry, it went lower, that run, by that run, every buyers are now stopped out. There is no more buyers. Nobody is strong enough to take buy again. There is the part of the seller. The sellers from there, the sellers from stopped out from there, and the buyers who are buyer here, they are going to be the sellers now because support broken. It's gonna be resistance now. They are going to take their sell there. So I have only the sellers, not the buyers. What I will do actually, I will do that. Then I will look for some kind of imbalance. Boom. Imbalance. Boom. Done. Job is done, man. Now, why market will go lower? Here is the part of T2. There is the part of T2. Random level. T2 will go for the random level. This is the last fair value gap. See, this is the last fair value gap from 15-minute chart. Last fair value gap. Here is the entry fair value gap. See, this fair value gap is the entry fair value gap. So I'm gonna mark that entry fair value gap over here. Market can reverse from a random area. This is the part where I'm coming with my fair value gap. How I'm going to mark, how I am going to measure the fall. I'm going to measure the fall by my entry fair value gap and the last fair value gap. Does it make sense? Whatever I'm telling you here, I know it's little confusing and my English is not good, my pronunciation is not good, everything is bad, but still, did you understand the logic? When you were the retail trader, how many times you buy and sell depending on the previous day high and previous day low, and how many times you have used the support and resistance zone? How many times you did it? Which one is most familiar to you, support and resistance or previous day high, previous day low, maybe previous session high, previous session low, previous week high, previous week low? Which one is more important to you? Which one is more what to say, more familiar to you? Support resistance or previous day high, previous day low? Let me know that. If it is well popular to you, the previous day high and previous day low instead of support and resistance, then I'm extremely wrong. Please go with the previous day high as your liquidity, previous day low as your liquidity. I'm familiar with support and resistance. I heard that textbook teach them the previous, I mean, sorry, the double top, double bottom, that means support and resistance zone. Textbook taught them by that way. I will go with that way. Keep talking, don't stop. Okay, reading chart by back eye. Okay, great, bro. Peter. Okay, I get your logic, brother. Okay, Mulwa, Samson, you are new, brother. Guys, I can see more than 50 people. Very small, I know. Still, 28 likes only. Seriously, man, I don't deserve some likes as well. Oh man, not true. So this is the part, brother, why I explain the retail things. Because if you don't add the retail concept with your ICT concept, this ICT concept is used for nothing. This is how this market move. Even market should go higher. Even market should take that liquidity. It has to do some drama here. It has to make some kind of fall move to make you confused that market is actually falling. It's not going higher. It's falling. Before falling, it has to make some fake move that will show you that no, market is not falling, it is going higher actually. This is how the buyers will be in the market. When, or if you are thinking that market will go higher, then the buyers will be eliminated first. If you are thinking, like, this is the summarize of my whole concept. If you are thinking market is going for the buy side liquidity, then the retail buyers will be into the trap first. There will be no buyers in the market. When market will go higher toward that buy side liquidity, there will be no buyers. Who are the buyers? Whoever take the buy from the support zone, that means our sell side liquidity zone. Whoever take the buy from there, they will be eliminated first. This is the first rule. There will be no buyers in the market if market would love to go higher. After eliminating the buyers, then market will eliminate the sellers. Okay, the buyers will turn into the sellers. They will start to take sell. First, I am a buyer. Market will go lower, so I am eliminated. I am not a buyer anymore. I am seeing this support zone turns into resistance zone. So I am also going to be the seller from the buyer. Now I am a seller. I take sell. No more buyers here, just the seller. When there is everyone is the seller, I'm gonna do that. The buyer sellers are going to be eliminated next. Simple logic. This is the theme of my whole talking. Okay, Stephen, don't forget to like, comment, share, and subscribe to my channel. Please don't forget to do that. And I know it's gonna be little difficult for you at the beginning, but trust me, slowly but definitely you are going to get everything, every single thing. So just marking the buy side liquidity and sell side liquidity is not enough. Is not enough. You have to read the price first. What is reading the price? The story. What is the story? The retail story. This market will alive. This ICT concept will keep working until there is the retail trader. If majority of the people are the ICT concepts trader, for example, out of 100 people, if 60 people is the ICT concepts trader and 40 people are the retail trader, then we ICT traders, we will be the liquidity, and the retail trader, they will be the winner. Then they will start to earn money from this market and we will start to lose money. If our percentage will be bigger, then we will be the liquidity, and retail trader, they will be the winner of this market. Trust me, write it down. I don't care. This is the logic. Because whoever the market maker is, he is just ignoring us. Why? Because we are just maybe how many we will be? Like 1 million, 2 million people? Still, how many are profitable from this ICT concept? How many? In my opinion, maybe 50,000 people, maybe 1 lakh, maximum 100,000 people are profitable to the ICT concept. Comparing with huge, a huge retail trader, near about 100,000. I mean, not 100 actually, maybe 10 million, 20 million, 50 million, or 100 million people. Out of 100 million people, there is only maybe 50,000 people who are actually profitable by using ICT concept. Why we are so small? The reason is nobody is showing us how to read the price. Everyone is telling us this is your buy side liquidity. I am showing you relatively equal highs. Maybe someone will show you session highs. Someone else will show you previous day high, previous week high. I am showing you fair value gap concept. Someone will show you market maker model. Someone will show you silver bullet, fair value gap, anything. Okay, every single one is just showing you the model. That's why we are loser. This is the simple logic, brother. You can't be the winner by the model. You have to read the price. You have to read the story the way I read the story. Now, why the model important? Because I know the story. I know market is going to fall fast. When market is falling, now I need the model. How far it can reach. Now I need the level. I need my price action. I need my uh, fair value gap. Maybe market maker accumulation, something like that, silver bullet, whatever. News, everything. Then I need. First, I need to know what market is going to do. Is it going higher? As my weekly analysis is telling, market is going higher. Is it going higher first? Should go lower first if it wants to go higher. I just gave you an example by thinking market will go higher. That's why I gave you this setup. Okay. If I'm absolutely wrong and market actually went higher first, then I will play the same game in a opposite way. For example, market actually went higher. Take the buy side liquidity. For example, okay. Then I will start to play the same game like that way. Over here, I will start to think this if it wants to go to here, seller, then the sellers will be stopped out first. Then finally the buyers will be stopped out. Then market will go toward the sell side. Guys, I need a small break for 2 to 3 minutes. I need to drink some water. I was fasting. The same thing. I know you feel very bad when I say that, but yeah, I need to drink some water. So I will take a break for 2 to 3 minutes maximum. I'll be back and I will go to natural gas. I don't know Buro is still here or not. If he's not here, I'm gonna skip that for sure because that is the market I never see. Okay, so just randomly open a chart and then analysis that chart is nearly so difficult. It's very difficult. So if Buro is not here, then I'm gonna skip that natural gas chart. But if he's here, I promised him that I will do that today, so I will do that. It will depend on Buro if he is here or not. But Buro is here. Okay, sorry, bro. Okay, just write down the name of the what to say. Mm, no skipping NG, brother. Okay, no problem. Just let me know that the symbol of natural gas. So I will come back and I will try to read. I mean, I will try to analyze that chart. Okay, but to be honest, I never see that chart. Just tell me the name. Okay, I'm coming back within 2 to 3 minutes. Just 2 to 3 minutes. At the same time, if any of you new here and you are staying with me from the beginning, and if you think it's little helpful for you, you can subscribe to my channel. Okay, at the same time, don't forget to give me a like. More than 50 people, but still I get just 38 likes. I deserve some likes, trust me, man. Either I deserve the like or I deserve the dislike. Any of this I deserve, so give me any of them, but don't skip it. Okay, I know the what to say. This is the latest video, A++ setup by ICT trading concept. This is the Friday price action, and also the explanation, so you can watch that. Trust me, it's gonna help you. It's gonna help you. This is your A plus. You always look for A plus plus setup. I don't believe in that, but still I did it. I believe that it's gonna help you a little bit. Okay, I just uploaded it around 8 a.m. New York local time. Okay, so you can watch that. This YouTube is actually doing something unfriendly with me. Uh, he's not boosting my channel. I don't know why, but yeah, it's not boosting my channel. I need your help, guys. If you can do something to send, I mean, to invite more people, I'll be happy to you. Okay, so I'm just coming back. Just give me 2 minutes. Welcome back. Guru, this is for you. Okay, as you I mean, I really appreciate your advice. Whatever you guys give me the advice, I try to keep that in my mind. But the last time you told that I should not say that I don't care because people doesn't like to listen that. But it's true, man. I will keep saying that I really don't care. If you are here to learn the price action, subscribe here. If you are here for the signal, unsubscribe me. That's for definite. I don't need subscription. I need people who are here, who are really wants to learn this concept. So I just need them. If that is one subscriber, I'm happy with that. I don't need the famous or something like that. I wanna be famous? No, never. If I wanted that, then I would continue this YouTube things. I know today or tomorrow it's gonna grow. Right now it's near about 4569 subscriber, but sooner it will be 10,000, then 20,000. If I keep continue this, it will grow. I know. All I need is little more people before I quit. That's all I need. So yeah, I will keep saying I don't care. I really don't care. If you are here to learn, I care about you. I will stop pushing you if I ever notice that you are not trying to listening to me. You're not trying to listen to me. Then I will stop pushing you. I will never mark your mistake. I'll never do that. I try to mark everyone's. Okay, whoever actually show me the chart, give me the screenshot to my Twitter. I keep seeing I mean your chart or your entries, and I try to find out is it okay or not. If I find out something is wrong, I try to correct you. Okay, whoever actually trying to communicate with me. So I noticed them, and when I find out that no, you are not here and you are not listening to me, you are not listening to my advice, you keep saying the things I told you not to say, and I stop with them and I don't correct them. Never ever. If I ever made my mind that no, this guy is not listening to me, I never correct them next time. Okay, I'm kind of mad person, to be honest, brother. I do whatever I want to do. I don't care about other people. I only care about myself. I only care about my word. That's all, brother. That's why I will keep telling that I really don't care why you are here. If you are here to learn, I will give you my everything to you. But if you are here only for the direction or only for the entry, I really don't care and I don't give a shit of that. Please leave my channel. I don't need you because today or tomorrow you are gonna regret and you are going to blame me that no, this thing doesn't work. This last parallel gap, random level, whatever I say, it doesn't work. Bullshit. I know it is working or not. I know that because I have that experience and I find out that it's working perfectly every single time. Never it happen again like other way. I'm 100% confident with that. You don't think? No problem. I will try to force you, and when I'll be done with you, I will stop talking about you. I'll stop showing you your mistake. That's all, brother. Simple. No, don't say that you do. I will do that, brother. I'm sorry, but I will do that. Enjoy your fasting open, bro. I did it already. Hey, Nahid, how are you, man? I'm fine. Big Mode, how are you, brother? Taking notes in your lecture, brother. Thank you, Ryan. That's the most important part, brother. That's the most important part. Remember your promise. This week, first parallel gap concept you have to teach. I will talk about the first parallel gap this week. Okay. So I didn't promise. I just told that I think this week I'm done with last parallel gap, but maybe I will continue the last parallel gap. But at the same time, I will go with first parallel gap as well. So mitigation block I try to show them, but it doesn't appear on the market most of the time. The mitigation block. Okay. So I was unable to show you more. I think I got only one example for the mitigation block last week in Monday. So until I mean, after that I didn't get any mitigation block example. But first parabolic cap is going to happen most of the time, so it will be easier for me to explain the first parabolic cap. But last parabolic cap I will keep talking about that. There is the membership link. If anyone is interested for that, you are welcome. Otherwise, yeah. So natural gas, NG, right? NG. NG, which one I should go? I mean, which broker I should? Which one is actually the mm, appropriate price? Can you tell me the symbol NYMEX or MOEX? Which one I should go? So don't be surprised if you are not getting a boost. At the end, you have to respect the people who are following you and supporting you. I respect them, brother. Shakti. Don't I? I mean, did I disrespect anyone? If I did it, I'm extremely sorry. I always respect people. I respect your comment. I respect everything. So yep. I mean, if anyone get hurt by my word, I'm extremely sorry, brother. The first one. Okay. What's that, man? Uh, simply it's falling. Simply it's just falling. If anyone is get hurt by my word, I'm extremely sorry. Okay. Okay, how can okay, I have another question. Whoever actually trade this natural gas or have an idea, do you have any idea which one is the correlated with natural gas? Like for Forex or Nasdaq, we have a dollar index which we can use as a barometer. Is there any other chart which is correlated with natural gas? Is there any other chart which is correlated with I'm sorry guys because I never what to say, I mean, I never see this in my life before. So if there is any other uh, chart which is correlated with natural gas, just let me know that. Okay, I would love to see that chart at the same time. Just let me know that any other chart. I don't know what's correlated with ng. Okay, so I think I have to stay with this one chart. This is the 3 month chart actually, which if I ever go with any new chart, I start with 3 month chart. So from 3 month chart, you can see boom, it's falling actually. So this is the zero level, natural gas zero level. Okay, let's go to monthly chart. Let me finish this first, okay? Then I will talk. Let me see what happened already over here. Okay. Let's go from the beginning. So this is the monthly chart. Market has taken the buy side liquidity, giving the market structure shift. This is the fair value gap over here. This candle low, that candle high. That is the fair value gap. Market trade that fair value gap. It's going lower. When it is going lower, I just mark this high and that low, because low, high, lower low. This middle or reversal swing, highest up close body candle, lowest down close body candle should be projected. For the standard deviation, I got this standard deviation over here. So if you come here one more time, here to here, you see this is that standard deviation minus 1.5 standard deviation. So until this is my sell side liquidity from monthly chart. Just look at this price action. What do you think? Market should go higher or it should go lower? In my opinion, it should go lower at least until that minus 1.5 standard deviation. So until price reach over here, I'm bearish for natural gas. Again, brother, this is my first time in my life I'm here in front of my natural gas. So I'm gonna do the weekly analysis for the next week only. Okay, just for the next week. And remind me this natural gas, because I would love to see how it react, because I'm really curious about this natural gas next week. From the monthly prediction, I'm thinking that market will reach over here at least. Let's go to weekly chart now. From weekly chart, you can see just over here, this is that fair value gap. Price has traded that fair value gap. It is falling. Now, I don't need any other price action from this weekly chart. The reason is market is just falling. It just keep falling. In this type of situation, I can go for the order block actually. So when market went higher, it just went higher. It went lower. This is that consecutive order block. But for me, this is that order block, exact order block over here. This low is my exact order block, the highest up close body candle. Why? Because this candle closed below that candle. It failed to close below that candle or any of this candle. Is it below that candle? Okay, it actually closed below that candle, so I can go with this opening. I can go with that. But still, the lowest highest up close body candle or this candle, any of them you can mark. Okay, over here I can see in hindsight it worked perfectly, so I'm gonna mark it over here. From weekly chart, it has traded that order block. It kept falling. Make relatively equal lows here. There's the relatively equal lows. Price went back again. That fair value gap started fall again. Now it is struggling around this area. It is just making so many relatively equal lows. I have a lot of relatively equal lows here. From weekly chart, my first uh, thinking is market will take that sell side liquidity, then it can go toward that sell side liquidity or it can go higher. Anything can be happen from weekly chart. So from weekly chart, my first intention is market is going to fall first. This is my expectation from weekly chart. Then if you come to daily chart, you will see market has taken that buy side liquidity, this high and that high, they are relatively equal highs. Market has taken that relatively equal highs. Market fall, there is no market structure shift. That means this fair value gap is not valid yet. Okay, market didn't trade that fair value gap yet. First I need, okay, sorry, my mistake. I got the market structure shift here. This is the market structure shift. Okay, sorry, I'm sorry. This is the market structure shift. Market can take the liquidity, then it can go toward that by daily fair value gap. So my expectation is from daily chart something like this. From daily chart, this is my expectation. First Monday it will be accumulated, then there will be manipulation, then it will go toward that by daily fair value gap. But remember, I am extremely bearish until this level. I am extremely bearish. But yeah, in a short period of time, I'm bullish. In a short period of time, if I get that type of things, accumulation, then manipulation, then distribution, I'll be very happy to take buy. Until it proves me wrong, I'm I'm bullish for this week. I'm bullish. Okay, not bearish. I'm bullish. First, it will take the liquidity, then it will go higher. Let's go to hourly chart. From hourly chart, you can see, sorry, over here, lot of sell side liquidity around that area, lot of sell side liquidity, low, high, lower low. If you project this swing, you will find out that minus 1.5 standard deviation is over here around that area. I guess minus 1.5 was that. Let me make it here. So this candle high and the body close here, sorry, minus 2.5, not 1.5, minus 2.5 standard deviation is over here. When minus 2 is broken around that area, it's broken. Until then it was perfectly respecting. See how beautifully it respect that minus 2 standard deviation. Then market went higher, make that minus 1 standard deviation as a resistance, broken, break that minus 2 standard deviation, trade that fair value gap, it should fall toward that sell side liquidity. Market should take that sell side liquidity. I am believing that market is going to take that sell side liquidity in Monday. In Monday, it's going to take that one. If it fails to take that sell side liquidity in Monday, it will. If it instead of that, if it start to consolidate, then in Tuesday it's going to take that sell side liquidity. Then in Wednesday and Thursday, I'm gonna get the expansion toward that buy side liquidity. This high and that high, they are relatively equal highs. Here I have relatively equal highs as well. Over here, this high and that high, also I have that on. But this buy side liquidity will be my target first. Above this buy side liquidity, I have this fair value gap. So market can just take that buy side liquidity and it can trade that fair value gap. Then I will take my another decision. Is it really going to take that extreme buy side liquidity or not? But until then, I'm bullish. But first, it has to take this liquidity, then something like this. If market fail to take that sell side liquidity, instead of that, if market start to do this type of things, in Monday it started to do this, Tuesday it went higher, take that buy side liquidity, then this sell side liquidity will be my target. I'll be bearish for this market if this happened. So I will take my decision in Tuesday, which one it has taken, the sell side or the buy side. This is the most prominent thing for me right now for natural gas. But if I see in Tuesday market went lower, broke that sell side liquidity very strong way, closed like something like this type of candle. See this type of candle here, see this one, or maybe that one. Very strong like this one. If I get this type of candle below this sell side liquidity, then I'm not bullish anymore. I'm extremely bearish until this sell side liquidity. So there is three type of condition in Tuesday or Monday. Within these 2 days, if market take that sell side liquidity, just sweeping the liquidity, like it will just go lower with a small candle, this type of candle, it will take the sell side liquidity, then it went higher, then I will be this, I'll think like that way. If market in Monday it start to do this, fail to take that sell side liquidity, instead of that, within Monday and Tuesday it went higher and take that buy side liquidity, like this candle, not kind of bull candle, something like this type of big candle, no, not like that way, just taking the liquidity, something like that, then it come back again into this range, I'll be bearish. Any of this didn't happen. Instead of that, what market has done, it just start the day with Monday or Tuesday and close something like this, something like that, then I'm extremely bearish, sorry, until this sell side liquidity. So this is my thinking of natural gas, brother. In short, okay, in short, I have done this, but to be honest, brother, this is the first time in my life I have seen this. But gun to my head, if you ask me what is actually I'm thinking, if you ask me, if I were trading this market, what was my thinking? This was my thinking. If I was trading the natural gas, then that would be my thinking. That market is going to take that low, then market is going toward at least that buy side, at least this will be taken, then this buy side liquidity will be taken, finally market will go toward that fair value gap. That would be my thinking. Okay, so finally this would be my target until maybe that consequent enforcement, that would be my target. Thanks again, bro. Love your work, see you tomorrow. Yeah, Peter, yeah, we will see you tomorrow. And bro, is it okay, brother? In short, I just try to figure it out. Is it okay, brother? If you think it's okay, I'm gonna close my session for today because I've already spent a lot of time over here, near about 2 hours, maybe more than 2 hours. How long I'm just doing this live today? Can anyone tell me how long I'm here in live today? I started at 9 a.m. so it's 11, so near about 2 hours already. Oh man, I thought I'll be done within 1 hour, but yeah, it takes longer time because one of my brother told me to go deep dive into the price action. That's why I went it. Uh, you got other brother. I will remind you. Okay, thanks again, bro. Love you. Okay, okay, you did good, brother. Okay, thank you. So yeah, that's all for today. If anyone has any question, you can ask me. Still, it's it's what to say. I mean, Sunday, so I can talk rubbish, no problem with that. But still, if you don't have any question, then now I'm gonna close my session. Okay, I would love to watch a movie today. Actually, I have downloaded a movie. I'd love to watch that one. Actually, that's a very very emotional movie. I have watched that one already one time. See this one, Hi Nana, 2023. It's an Indian movie, a very emotional movie. Okay, so I'll watch that movie one more time. Yep. So for yep. So and thank you for subscribing. Whoever subscribed to my channel, thank you, man. Answer my question. What's your question, Ravi? You didn't answer my question. What's your question? Could you please check gold? Fazlul, seriously, man. Now gold. Oh man. I thought I'm gonna close my session, man. Please don't give me more pressure today. Please, that's my request. Okay. I mean, the reading price action is really so difficult. Okay. Hi Nana. See, Hi Nana. There is the movie. Hi Nana. 2023. It's a Hindi movie. Okay, go watch your movie, brother, and enjoy your Sunday. Yeah, man. Please let me go to gold, and I'm just gonna answer Rabib's question. What is your question, Rabib Hassan? Bro, I see that sometimes DXY and NQ run same direction, but DXY and Euro USD always run opposite direction. Yeah, I told that already. DXY is just a barometer. We try to find out the opposite run, but sometimes we get the same run. It doesn't matter. But forex will always go opposite. I mean, like AUD, where the USD at the end of the pair, like a Euro USD, GBP USD, AUD USD, they will always go in opposite way. If they ever go the same direction, you will see the high resistance liquidity run, and most of the time that will be a choppy market. But in future market, they can go the same direction. You just can't use the dollar index minute chart, okay, something like that. If you go over here and dollar index and to minute chart, no, I don't ever go to my minute chart. My lowest time frame is 15-minute chart. I'm happy with my 15-minute chart because I just need the direction. Is dollar going higher or is dollar going lower? If I find out that dollar is going higher and I'm expecting the Nasdaq is going lower, I'll be very confident. But if I find out that dollar is going lower and Nasdaq is also going lower, then I'll be very careful. Okay, I'll be careful, but that doesn't mean they can't go the same direction. A lot of time you will see that they're going to the same direction. So there's nothing to worry about that. Okay. So same thing. Thank you, Fazlul. I'm really I don't want to go to gold today. Oh man, I really want to watch that movie. So guys, I just gave you the answer, Arabib. I guess anybody has any more question? Like the question. If you have any question, I will answer it. Otherwise, I'm done. Thanks for joining and let me know. I will wait 10 more seconds because I know I am delayed 13 seconds. So I'm gonna stay 13 more seconds. Then I'm gonna close my session. And thanks to join to my team for today's boring lecture. If you find out something good from here, don't forget to give me a like. If you are new, you can subscribe to my channel. Just don't subscribe and go, I mean, disappear. No, don't do that. If you subscribe, you have to keep coming. So opposite direction is high probability. Absolutely, brother. Opposite direction is high probability. Same direction is low probability. Yeah, I think I'm done. So happy weekend, bro. So we will see tomorrow. I'm not sure that I'm gonna come with my real money or not, but I'll be very choosy about that for tomorrow, Monday, because we have a news in Monday. If we have the news in Monday, it's gonna be unfair price action, because Monday actually we used to see the accumulation phase without any news. As we have the news, I'll be very careful about Monday tomorrow. So yeah, that's all. Thanks again and see you tomorrow. Until then, cheers.